Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks we love to hear what different stocks you're looking at and your opinions on the market sentiment. Today we're looking at two strong buy stocks that billionaire investor Ray Dalio has put his bets on. Now before we jump into this video guys, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. The stock market has been making a bit of a transition in these first few months of 2022. Last year we saw some impressive gains in the stock market, but it seems that this year is showing slower growth. Headwinds are mounting, the pandemic is still persistent, and the inflation rates are getting higher and higher. And on top of this, because the inflation rate is getting higher, the Federal Reserve is also going to have increasing interest rate hikes throughout the year. So naturally, as investors, we're looking at those investors that have a renowned track record. So no better way to do this than by looking at what billionaire investor Ray Dalio is buying. He got his trading start around 50 years ago, and he's built his firm Bridgewater Associates to be the world's largest hedge fund. Bridgewater manages $150 billion worth in total assets. So let's just take a look at what Dalio has added to the Bridgewater Associates portfolio. The first stock is XPO Logistics, and its ticker is XPO. XPO Logistics is in the transport sector. It's a freight carrier based in Connecticut, and it operates as a transport broker. The company offers less-than-truckload LTL freight services to customers across North America. This makes it possible for customers to move loads that don't require full semis, trailers, or containers. XPO can broker freight haulage for more than 50,000 shippers across 99% of all U.S. postal codes. The current price for XPO is $70.96. The analyst rating consensus is a strong buy, with 13 buys and 1 a hold. The analyst price target is $97.79. This is a 37.81% upside based on 14 Wall Street analysts offering 12-month price targets. The supply chain crunch sort of drove up ground freight costs in the US, and it redounded to XPO's advantage. In Q4 of 2021, the company reported, in its own words, the highest revenue of any quarter in the company's history. The top line came in at $3.36 billion, which was up 14% year over year. Non-GAAP EPS was $1.34, and this was up 152% in the same period. And in Q4 2021, the company saw $98 million in cash flow from operations, of which $57 million was free cash flow. For the full year, the company reported $656 million in cash flow, with $475 million of that being free cash flow. The TipRanks Smart Score is a 10 in that it is very likely to outperform the market. And since we know Ray Dalio has the hedge fund Bridgewater Associates, hedge fund activity overall has increased by 1 million shares in the last quarter. Analyst ratings are a strong buy. TipRanks investors are also very positive, and blogger opinions are bullish alongside news sentiment, which is also bullish. So Ray Dalio liked what XPO has to offer. In Q4, Bridgewater bumped up its holding by around 248% when it bought up around 79,031 shares. Now the fund's total XPO position comes in at 110,914 shares, worth around $7.72 million at current prices. Even Wall Street analysts are bullish. Amit Mehrotra from Deutsche Bank is bullish, and he wrote that we think street estimates incorporate some mismodeling that should result in a sharp revision higher in the coming weeks and months. We still believe that there is substantial upside in shares from a plan that accelerates deleveraging and focuses the company on becoming a pure play LTL. As you can see, he's given it a $120 price target, which is a 69.11% upside. The second stock is Equifax, and its ticker is EFX. As economic activity grows, consumer credit is becoming increasingly important. In fact, consumer spending accounts for 70% of the US economy. And of course, much of that is driven by access to credit. And this is where Equifax steps in. Equifax is one of the 3 biggest consumer credit reporting agencies, with a database holding aggregated information on more than 800 million individual consumer and 88 million businesses around the world. Equifax actually operates on both sides of the credit monitoring business, selling credit and demographic data to enterprise customers and credit monitoring and fraud prevention services to retail consumers. The current price for EFX is $211.61. The analyst rating is a strong buy, and this is based on 9 ratings, with 8 a buy and 1 a hold. The analyst price target is $305.67, which is a 44.45% upside based on 9 Wall Street analysts offering 12-month price targets for Equifax. The growth of Equifax's business can be seen in its long-term trend. The company has seen 8 quarters in a row of double-digit year-over-year revenue growth, and its Q4 2021 top line was at $1.3 billion, and this was a company record, and this was up 12% from the year-ago quarter. EPS came in at $1.84 per share, and this was down 8% year over year, although just above the $1.81 estimate. Their management was confident in Q4 earnings, and they declared a quarterly common share dividend of 39 cents. This makes for a 13-year streak of reliable payments and a modern dividend that goes back to 1987. In fact, Equifax has paid out dividends for over 100 consecutive years. The current payment annualizes to $1.56, and it gives us a modest yield of 0.7%. The key here is not the yield, but the company's long-term commitment to reliability. The TipRanks Smart Score is a 6 in that it is neutral when it comes to outperforming the market. Analyst ratings, however, are a strong buy despite TipRanks investors being very negative. Blogger opinions are bullish, news sentiment is also bullish, however, hedge fund activity has decreased. But we know one hedge fund that has increased its holdings in Equifax, and that is Bridgewater Associates. In fact, Bridgewater opened a new position in Equifax in Q4, buying 14,896 shares. At the current share price, this holding is worth $3.3 million. Well, billionaire Ray Dalio isn't the only one that's a fan of Equifax. Evercore analyst David Togut rates the stock as an outperform, and he gives it a $370 price target, which is a 74.85% upside. He wrote that in its largest business, Workforce Solutions, Equifax enjoys a near monopoly in income and employment verification, reducing its historic dependence on mortgage, auto, and credit card related consumer credit reporting demand. And for the year ended 2022 and the year ended 2023, Workforce Solutions revenue should grow 19% and 13% and 2% and 3% over consensus, respectively, fueled by 5 key growth levers. The first being incremental Work Number records, 2, more pulls on the TWN database, and 3, deeper market penetration, 4, pricing, and 5, new market entry, all supported by new product innovation and the Equifax cloud. So guys, those are the 2 stocks that Ray Dalio added to the Bridgewater Associates portfolio. Are you guys bullish on these stocks? Leave your thoughts in the comments below. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, this is not financial advice. Make sure you do your own research before you invest in anything. Thank you guys for watching, and I'll see you guys in the next video. Bye!